Happy Friday, traders. It's 8:02 a.m. here in Chicago, and of course in the central U.S. time zone on Friday, the 1st of March 2019. It is a new month, new beginning, end of week. Um, Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you're hearing me nice and clear. This morning, risk on sentiment, it looks like the market has taken a pop in the overnight. There were some, what's driving that? Nobody really knows, but we did get a really good, a pretty decent PMI manufacturing number out of China. It was stronger than expected. However, it's still in a contraction, in the contraction value. PMI below 50 indicates contraction, and it's in its third consecutive month of contraction, but still better than expected. In addition to that, there was a news release last night that a deal is pretty much done and is getting written up for Xi Jinping, China's prime minister, and Donald Trump, President Trump, um, to sign. So that's good news overall. Looking at how things are shaping up, the calendar is just incredibly busy. Was incredibly busy last night. There's just scroll and scroll and scroll, full of information. Retail sales out of Germany, the market manufacturing PMI out of Germany came in line at 47.6. Unemployment change came in a little bit worse, and so on. And then we got GDP out of Italy, which was lower than the prior, zero point 0.9 versus 1.6. And then this morning, and we got GDP out of Canada as well, which was worse, 0.1 versus 0.5. The annualized rate 0.4 versus expected 1.2%. That's quite a big difference there. And then we got personal income this morning, which came in pretty strong, 1% versus 0.4, and so on. We still have ahead of us, we still have market manufacturing PMI for the US. That comes out 15 minutes after the open. We get ISM manufacturing, which comes out at 10 o'clock Eastern, a half hour after the open. And then we have Michigan consumer expectations final, which does not have as much of an impact as prelim, at also at 10, and Fed's Bostic at 12:50 p.m. and so on, to wrap up our week and get us into the weekend. The leader today is the DAX, up 1.17%, way ahead of everyone else, followed by the NASDAQ, which is up 47 points, 0.66%. The Dow's up 165. The CBOE volatility futures are down 27 cents, or 1.77. And gold is at $1,306.80, down $9.30. So that just gives you an idea of where we are. Risk is definitely on. The bonds are getting hit again, 14 cents, which is expected on a risk on day. But even on risk off day, the bonds have been getting pushed down, yields getting pushed higher on there. It's an inverse relationship, price to yield, which is kind of interesting. But that's why we're going to have on the 21st. This is why we're going to have Ira Harris on. He is a global macro trader who can shed some light on how these things move and why they matter for equity trading. I think it'll be very interesting. That's on the March 21st at 4:30 Eastern for an hour. We're going to have him for an hour on a Trader Spotlight. That'll be announced, of course, and it'll be recorded. So let's move on to our review. So looking at what was expected yesterday, the primary scenario was for a drift down to 27.85.50, 85 even, the MC point of control, and then a pop to take out the overnight high, expecting it to go and push to 27.94, 95. So the key areas yesterday, 85, 82.75. So from bottom to top, 82.75, 85, and then the top is 94, 94.50, 95. And if it pushes through, then I was expecting it to push into 2800 and stall up there. Uh, that didn't quite happen. We did end up, I mean, I know I sound like a broken record, but man, this trade is just awful. It is terrible. Historical volatility based on closing prices, pit closing prices is at 15 in range. Um, it's at 23. It's not at 23%. I lied. It's at 15, 8%. The 20-day historical volatility close to close is at 8%. Contrast that with where it was in December and January. Remember, this is a lagging number because it's a 20-day rolling, which was at 32 historical volatility. And at 32, we expected the day's range to be, or close to close, range to be about 52 points. And currently it's at 8.6 with a close to close range potential of 15. So it's just a complete collapse of volatility there, and we're seeing it in the opportunities, the lack of opportunities that are taking place in the ES. Remember, I talked about it yesterday. This is just the market regime that we're in, and the market goes through these cycles where it compresses and it looks awful. It looks like we should all just go do something else. And then it opens back up, and then as soon as it opens back up, it begins to compress and back and forth and back and forth. So during these times, it is really important for us to spend our time as traders honing in our skills, working on areas that are weak in our plan, working on our patience, our mindset, that sort of stuff. You just need to survive these areas. Survive these areas so that when it does open up, you're here to take advantage of that, just like we saw in September, October, and then again in December and early January, and of course January, February of last year. It's just the way it is. It's the nature of the market, so get used to it. So yesterday we did push down into the 85 area. The low is 84, 84 even, or actually we ended up taking that low out. We ended up going neutral and then breaking back. So we went neutral. We broke down here. We went neutral up. And the normal course of action is it either continues higher and we end up with a neutral extreme of some sort, or we end up somewhere in the middle. This actually broke down and broke that low again, putting in a lower low overnight at about 83, 82.75. So overall, the areas that I was looking at yesterday, as I'd mentioned, somewhere around 82.75 to 82.75, 85, up to 27.95, and a break above 96, and a quarter will likely take us to 2800, and we didn't quite accomplish much there. So it's really difficult. I also found that peculiar enough, generally, if I don't see on the chart what it's trying to do, I can read it in the order flow. Generally, I use time and sales just a tape to do that, but I've been using the volume scope, basically a footprint, and of course, I rely a lot on this to read what is resting versus what the market is trading against. And as you see on here, as I mentioned yesterday, I'm watching other markets more closely now. ES is on the left, RTY, and then NQ to the far left, and you can see that there are more rotations. It moves a lot more. The moves are a lot bigger in the other markets. which presents opportunity but also presents more risk, right? So I'm watching those markets. I haven't fully done the 100% the homework for the RTY and NQ to get back on them. It's been a heck of a busy week, but my intent is to look at those markets more closely and to start working on doing the cloud note levels and things like that for them, for those people who are at CT convergent. So that's yesterday. Not much accomplished. Where did we go? Not much accomplished if you look at it. An inside day yesterday also didn't take out the overnight high or low. It did not fulfill that stat, and it's still stuck in this consolidation area, this balance area. So yesterday was really compressing lower highs, higher lows, and it's really consolidating. The overnight session just a drift down towards the prior low and missed it by a tick, and then it's just a drift up all evening or the entire overnight session. We're way up above the mid VWAP, and we have a P-shaped profile. It looks like short covering taking place in the overnight session. We have a very high kurtotic, like a very compressed point of control area. Very odd looking profile here. Looks like a drawing of someone's profile with a hat on or something. It's just really the way this is shaping up. I mean, this is killer right here. Holy cow, this is so tight. Basically a 3-point range or 4-point range for the entire European session right here. Just awful. 183,000 traded, which is a little higher than what we've been getting recently, just slightly higher. 160 or so has been about the average. And the overnight session is saying we're just squeezing and squeezing and squeezing. So we're opening up in a gap higher, in a gap up, and that's the reference point we have to start from today. The market's pushed as high as 28.03 quarter. Remember, 28.05 is important up here. We did put in a somewhat of a kind of a double topish that was broken by a tick there at 28.03 quarter and 28.03 half on Tuesday, and the overnight session went right to that. So I expect that to be flushing a few more shorts out once it breaks through. And I do expect it to break through today. So what are we expecting for today? So first, I'm going to take a minute to ask you to hit the like button. If you don't see it in front of you, you're on the Convergent Trader Byte page. At the bottom right corner of the video, you'll see a YouTube link. Click on that. It'll take you to YouTube, and just please go ahead and hit the like button before you leave today. What am I expecting for today? The primary scenario for today is going to be typical for this kind of open. It's likely to be an open auction out of range. I expect the market to make some attempt lower. I expect it to push through the 28.03 high, spike through 28.05, and then start to work its way up into this naked point of control at 28.09, and we are now templating Monday's trading. So this is a really important area here. It's the low volume node. It is the low right there. It is the high right here, and we're likely to squeeze through it, and it's likely to push a few traders out. So I expect this to turn into a grind up day, pushing this 28.14 area and then finishing up somewhere in the within the range. I expect us to again leave a gap below us. We don't, 3 out of 4 times lately, just kind of a rule of thumb, 3 out of 4 times lately, we don't fill the gap. So I'm expecting that same behavior. We always expect the same momentum. kind of like physics, Newton's laws. We expect them to continue as they are until something changes. The secondary scenario is an open that pushes immediately up above, squeezes into this 28.05 area, gets a response, consolidates, and then starts to drift back into the prior range. 27.94 becomes important. 27.94 becomes important. And then if it does continue to push, and I'm expecting this 27.92 area to be a pretty decent, this value high here, to be a pretty decent area for a bounce back up. And again, closing within its own range, the day generated range. Those are the two main ideas for today. The third idea is a response that does not get any follow through. That would be the scenario 3, a response that does not get any follow through. So a test down, and then that frees up buyers to buy it up. So a test down does not get much follow through, a strong impulse up to 27.09, and then a strong continuation trend-like behavior higher. Okay, I expect the market to go higher, much more so than going lower. The areas to pay attention to from bottom to top: 27.90, 91, 27.95, 94, 28.03 half, and then 27.09, and then from there we're likely to aim for 28.14 and to continue to squeeze. Okay, so I am not going to look to short 28.04.05. That's too close to the open. It's well within the noise of the open. That trade was ideal for Tuesday, Wednesday, and it just did not happen. We didn't quite get there. On Tuesday, I was looking for 0405, turned at 3/4, then again turned at 3/2. This is almost like a multi-test that's going to be an additional test at this point, and I expect it to squeeze through or push through this time around. Okay, don't forget to hit the like button. Thanks for joining today, and I'll catch you on Monday. Good luck. It's Friday. Pay attention to your risk. Pay attention to your emotions. Emotions are just inherent to us carbon-based beings. Don't let them influence your trading. Trading from the gut is not trading, it's gambling. Good luck.